Hi there, I'm Dean Heskin, President and CEO of Swiss American Trading. For those of you who've tuned in the past, you knew that already. And thank you again for tuning in. Thank you for those of you who are tuning in again. And for those who are new, tuning into our podcast, The Secret War on Cash. And we do have actually in 2025, we're now in March 2025, a doozy of a war on our cash taking place or going on. And to discuss this with us today, I have my co-host, Chris Agelastos. He should be popping in here any moment. There he is. Chris, good morning. How are you today?
I'm doing great, thank you.
Well, it's good that you're doing great. I think I'm doing pretty great as well. Feel good. Unfortunately, I cannot say the same thing for the US dollar. Um, the US dollar, let's get right into our headline here. US dollar, Chris, is having the worst year since 2008. And what's I'm not going to say that the headline itself doesn't come as a complete shock because there's a whole lot of things, we'll call it, brewing in the economy right now. But I will say that, I guess I should say, and I would add to that, that, now that we have, I don't want to speak for everyone, but there are a lot of people out there, myself included, that um, I, I'm glad that we are in this new Trump administration version 2, rather than
Mhm.
being in, a Biden situation or a Kamala Harris situation. This was to be expected, though, that we knew going in that Trump was going to have his hands full with the economy. Now, the US dollar having its worst year, and this year's only begun. So tell us what's going on with the dollar. Why is it having a bad year? And is it going to continue to have a bad year throughout 2025, Chris?
Yeah, well, that's the magic question. What's the rest of the year going to look like? Most of this right now is due to economic uncertainty. Like you said, we've got a lot going on in the world. Certainly, these recent trade policies, the tariffs that everybody has been talking about, are having a big effect. Um, you know, the real question is, how is this going to affect Americans? When I heard the worst since 2008, when I got into this article, I was kind of a little surprised. I mean, I know things are bad, but I remember '08, and '08 was rough, right? I mean, we had a huge drop in the market. We had the housing crisis. We had bank issues, and the dollar year to date is down 4.2%. In '08, when things were very bad for a lot of people, it was down 4.8%. So we're we're right there knocking on the door. There's no saying that this couldn't end up worse than '08. That's how close we are. And so that's really the big concern. What's the rest of the year going to look like? A lot of that is going to depend on interest rates and just how the economy can rebound from all of these trade wars. A falling value of the dollar is good from a export standpoint. It makes our goods a little bit more competitive. So it may help some businesses, and if those businesses are doing well, then maybe it will help those particular employees. But the downside to it is all of the goods that we import are going to now cost us more. And in our country, that's a lot of items. So,
Sure.
you know, it, it's really hard to say at this point. Even Trump, I saw President Trump, I think it was yesterday, on Maria Bartiromo's program. She asked him, "Are we going to go into a recession?" And he kind of avoided it a little bit, but he all but said, "Look, there's going to be some pain, and for us to see positive benefits, we're going to have to endure some things." So that's kind of what has everybody, a little freaked out at the moment in the markets.
Sure. Well, and let me ask you this, what your opinion on this is. Obviously, part of the stress and strain that the US dollar is under right now, yes, due to tariffs, but a lot of that too being directly, excuse me, related to BRICS and what's
Hmm.
developing there.
Hmm.
You know, Trump came out right away. Again, we've talked about this many times before he even got into office, was levying threats against people about nations, how he was going to, be putting these 100% tariffs on, et cetera. So
Hmm.
when you talk about like the dollar, as it does weaken, it's good for our exports. My concern there, and I don't know if you have an opinion on this one way or the other, but I'm not blaming Trump for this because something has to happen. He had to do something because of what's taking place and what's been taking place, as we've talked about. Like the Biden administration didn't even
Hmm.
acknowledge that BRICS even existed for the most part. The
Right.
bottom line is that, do you think there's a chance that we've created, by way of these threats and whatnot, such a um, kind of almost like a toxic environment with these nations that they might even be a little resistant or reluctant to trade with us because we've kind of taken this, hey, you better do this or else type approach with them. And
Hmm.
they've already said, well, no, we're not fully on board with that. And that's what I wonder, is that in and of itself going to create bad relations and impede, what we could be doing with commerce and trade.
It's certainly a potential risk. I mean, I'm seeing news stories about Canadians really upset right now, pulling a bunch of U.S. products off of the shelves, and some companies saying that they'll never do business with the U.S. again. So certainly there's a chance of that, but I think it's also emotions are running high right now. Like you said, there's a lot of this rhetoric in the news cycle. We're hearing about these trade wars, and people are getting competitive about it. But at the end of the day, usually people do what's best for their pocket. And I think if we can get through this and negotiate some of these terms, and hopefully level the playing field a bit between us and other nations, people will hop on board because it's what's in the best interest of their pocketbook. But anytime you're stirring something up like this, you run the risk that you're going to really cause some long-term relationship problems that maybe the dollar isn't going to be able to fix.
Right. Well, and I think it literally just speaks to just how fragile things are out there. That I agree with both sides of that discussion or argument there. Where yes, at the end of the day, pocketbooks, you would like to believe, or tend to prevail, but by the same token, sometimes hurt feelings get in the way of that. Could have some hurt
Yeah,
feelings out there.
for sure. It's
And
happened at
speaking
my
of,
house, I know.
well, speaking of hurt feelings. It looks like Wall Street might have some hurt feelings of their own as we look at this
Yeah.
Reuters article here. Related to the dollar, I mean, Wall Street sell-off deepens as Trump sparks recession concerns. You kind of touched on the word
Yeah.
recession just a moment ago. And we've had what was it yesterday, a 1,000+ point drop in the Dow, and it's struggling and fighting today. And it's not really, doesn't come as a shock or surprise really, because look at all these things that are happening out there.
Yeah.
Now the good thing is with the Dow at 40,000 and 1,000 point drop, it's not like when the Dow was 20,000, let's just say, and it had 1,000 point drop, but
Sure.
nonetheless, it's a big drop. And I think the bigger concern, or thing to really look at or talk about here is this what's going to stop this selling off? And it's happening because of fears of recession. Again, all the
Hmm.
things we've talked about, the tariffs, excuse me, weakening of the dollar. But what is going to stop it? Is there something that is going to happen that is going to miraculously, cause a shift and cause, the Dow, or the Wall Street, to kind of get its feet back underneath it anytime soon?
I mean, we need a few things. That's kind of the challenge, let's say we put this trade war to bed, and things quiet down there. Well, we've still got a lot of battles around the world geopolitically. We still don't know what's going on with Russia and Ukraine. We're still and we're in a ceasefire with Israel right now, but that can change. There are a lot of things that are just fluid, right? And so we may be heading in the right direction, and hopefully we stay that way. But it also may not be the case. So those are big factors. Interest rates, one of the challenges here too is um, cutting interest rates could help the economy a little bit, but that may also weaken the dollar more. And so it's,
Sure.
it's multifaceted. And really what needs to happen is just an overall shift in investor sentiment. And when I was reading, going through this article, they had a lot of quotes in there from influential people in the marketplace. And, I just jotted down a few of the words that people were using: volatility, rough patch, unravel. You know, not great words to hear when you're talking about the stock market. But right now, everybody is kind of on pins and needles and or negative. There's really not a whole lot of positive going on. Can it turn around? Yes, certainly. But we're going to need some wins. We're going to need to close a few of these battles and see some positive benefits. And the average investor is going to need to see it in their household. And for that to happen, it can take months. Not just days.
Sure. Well, and all those dirty words you read, the real problem with that, when yes, it's talking about the stock market, it's talking about Wall Street, but
Hmm.
that's also the translation there talking about people's future, their retirement, their
Yeah.
savings, and things of that nature. And
Yep.
those are not the kind of words you want being thrown around when you're talking about
No.
your future and your investments and your savings, et cetera. So, I definitely think that there is and you touched on the interest rates being cut, and
Hmm.
that's something we haven't really talked much about. But what from the things that I've been following and reading, that they say is kind of a target of President Trump and this administration to get these rates down because we've got a wave of debt coming due. And it would break us if we had to reissue debt at the higher rates of interest. So we are really needing to see some pretty significant rate cuts in order to, further continue issuing more debt without,
Hmm.
tipping the apple cart over, if you will. So
Yeah.
we'll talk more about that for sure. Thank you, Chris. And for those of
Yeah.
you tuning in, if you have not received a copy of our Secret War on Cash report, you can get it for free by calling 1-800-289-2646, or you can visit us online at www.swissamerica.com. Both of those descriptions and these articles actually are in the description of this podcast. So you can just click on that and have access to all the good information, all the good things. And you can also actually text us at that same toll free number, 1-800-289-2646. Thank you so much, Chris. And thank you for those of you who have tuned in here to our podcast. If you're subscribed, thank you for that as well. And if you have not, please do so, as we'd love to see more and talk more about this and other things in the future. Thanks so much and have a great rest of your day.
Yep. Take care.